Neeraja, is my screen visible?
Sir, your screen is not visible, sir.
One second. So GST and deemed exports, the slide.
No, sir.
Okay, 1 second. I'm just sharing it again. Now,
Yes, sir.
sorry, I switched it off. I think 1 second. So is my PPT now visible?
Yes, sir, it's visible, sir.
Right. So, a very good afternoon to each one of you. It's extremely a pleasure to invite you all to this 48th session of Zen Tax Talks, wherein we would be discussing about a very crucial and important topic under GST. Almost such category of taxpayers. So talking about this very specific topic, GST on imports. So first of it, before we really deep dive into this concept of deemed exports, the first concept we need to know is what is under this. That is a difference between an export and a deemed export. So on a very colloquial understanding, based on various practical experiences that we have, voice is breaking. Okay. 1 minute. Better now. Switching off the video on all sides. So, am I audible now?
Yes, sir.
Okay, so is my screen visible? Port under GST. Right. Okay. So sorry for the technical inconvenience due to other compelling reasons, such as the income tax due date. We could not have the session yesterday, which is the normal day that we have always have the session, that is Friday. And today being Saturday, and I had to be on travel. So there has been some technical difficulties, but my screen is now visible and I hope my audio is also well clear. So there is a fine difference, or a very crucial and important difference, between what is an export and what is actually a deemed export under the purview of the GST law. So export of goods is a defined term under 2 clause 5 of the IGST Act. So the entire ambit of the subject of discussion today is GST on deemed exports. So exports generally could be export of goods or export of services. Export of goods, we have a separate definition under 2 class 5, which says export of goods with its grammatical variations and cognate expressions means taking goods out of India to a place outside India. So the concept is extremely very important, that export is only and only if goods are taken from India to a place outside India. So the necessity for goods being taken out of India. This is a very common example on a business that we always say when there is a transaction that is happening between Singapore to Dubai. The invoice will be sent through the company in India. So when the transaction is between Singapore to Dubai, there will not be any involvement of GST because of a specific entry in Schedule 3 of the GST Act, which very specifically provides that this is neither a supply of goods nor a supply of services. Of goods from Singapore to Dubai will not satisfy the definition of goods as contained in the GST Act for the specific reason. Only and only when goods are taken out of, so the goods have to move. The goods have to move from India to a place outside India. Oh, my voice is still breaking. 1 second. Okay, I'm changing my internet. 1 minute. Okay, so I have changed the internet. You have to let me know if it is a little better. Okay, right? So, great. Thank you so much. Thank you so much. So, export of goods has a very specific definition. Very similarly, we also have a definition for export of services under 2 class 6 of the IGST Act. Export of services means the supply of any service when the supplier is located in India, the recipient is located outside India, the place of supply of service is outside India. Payment may be in Indian currency or in convertible foreign currency also. The supplier and the recipient are not distinct persons, right? So these are the conditions that needs to be satisfied with respect to export of services. Now an immediate questions to the audience is, with respect to a deemed export, which is the subject matter of the discussion as of now for the session today, can a deemed export be in relation to services also, or should the deemed export be only in relation to goods? That's the first and foremost understanding, fundamental important understanding that we need to have to understand the concept of deemed export. So can a deemed export be a transaction involving supply of services? So, or deemed export means only and only whether it is with respect to supply of goods. What is the view of the audience with respect to this? As we get this clarification over here, the aspect that we need to clearly understand and note is a deemed export is also a very clearly defined term under the GST law. It is not something which is to be understood in a colloquial parlance. There is a very specific definition. Unlike the definition of export, which is contained under the provisions of the IGST Act, to be noted very clearly, Section 2, Clause 5 and 2, Clause 6, which I had displayed and explained in the last two slides, relates to the provisions of the Integrated Goods and Services Tax Act. But whereas the concept of deemed export is contained in Section 2, Clause 39 of the CGST Act. 2 Clause 39 of the CGST Act goes on to define what is a deemed export. So deemed exports means supplies of goods as may be notified under Section 147. So there is no much of a detailed explanation given with respect to deemed exports, but there is one portion which is of utmost significance, which clarifies the discussion that we just now started to say whether a deemed export is only and only with respect to goods or it covers even the supply of services. Deemed exports means such supplies of goods. Therefore, the definition of the concept or definition of the term deemed export very clearly goes on to say that if it has to be a deemed export, it necessarily needs to be only and only with respect to goods and not with respect to services. So there cannot be any situation of deemed export of services. It can only be a deemed export of goods. So with respect to deemed export of goods, what are those transactions which are covered as deemed exports as is contained under Section 147? So the natural expectation would be that Section 147 would be a detailed section or a legal provision which explains the various transactions which would be covered under the concept of deemed exports. Let's read what 147 actually holds for us. Section 147 is a very, very small section, the most simplest section that we could say. Government may, on the recommendations of the council, notify certain supplies of goods as deemed exports, where goods supplied do not leave India, right? So the basic criteria with respect to export of goods as was contained in the 2 Clause 5 of the AG Act was that the goods have to leave India. But here, when it is a deemed exports, the goods supplied do not leave India and the payment for such supplies is received either in Indian rupees or in convertible foreign exchange if such goods are manufactured in India, right? The condition is that the government can recommend certain supplies of goods as deemed exports, even if it does not leave India, perfectly fine. The payment is received in convertible foreign currency, yes, of course. If the payment is received in INR, still okay, not a problem. The condition is that such goods are manufactured in India. So, buying goods from China and supplying in India or even supplying it to other countries never fit under the definition of deemed exports because the basic criteria contained under Section 147 of the CGST Act very clearly goes on to say that such goods need to be necessarily be manufactured in India. So that is one of the important criteria. There is no criteria that the goods have to leave India. Unlike the concept of export of goods, as we already saw in 2 Clause 5, even if the goods do not leave India, it can be a deemed export. So what are those transactions? The situations which are covered as deemed exports are contained in notification number 48/2017. So this notification number 48/2017 contains a list of 4 transactions which really explain what are the situations when you could be covered under the concept of deemed exports. So the first of the situation is that supply of goods by a registered person against advance authorization, right? So If the goods are supplied against an advance authorization, then even though the supply is within India, the goods do not leave India as long as it satisfies criteria that it is manufactured in India. Still, it is deemed to be an export under the provisions of notification number 48 by 2017, read with section 147, based on section 239 of the CGST Act. So based on this, even though these four situations, so supply of goods by a registered person against advance authorization, number one. Number two, against an export promotion of capital goods authorization, which we simply call it as EPCG. So against EPCG, if there is a supply of capital goods by a registered person, we really see in all the first three limbs of the entries to notification number 48 by 2017, it very clearly stipulates that the supply is by a registered person. Common in all first three entries is supplied by a registered person. In clause 2, in serial number 2, see, these entries are found as a table in notification number 48 by 2017, and each of these line items is what we are now discussing here. So serial number 2 is with respect to capital goods. Serial number 1 is against advance authorization. Serial number 2 is capital goods against an EPCG scheme. Serial number 3 is to an export oriented unit, which we commonly call it as an EOU. And the fourth one is applicable only with respect to bank or a public sector undertaking which supplies gold. So this is one special other provision which was contained only for supply of gold by the bank, which is also against advance authorization, as is very much stipulated in one of notification number 48 by 2017. But here it is now very clear that if it is against an advance authorization or against an EPCG scheme to an EOU or supply of gold by a bank or a PSU, you are covered under this concept of deemed exports. So as a deemed exporter, what really happens? Starting from the explanation 1 to 48 of 2017 goes on. There are three explanations. There are three major entries. One is against advance authorization, second is with respect to EPCG, the third is with respect to EOU. All these three terms are defined by way of explanation to notification number 48 by 2017. Read with the amendments is what we are going to discuss now. Advance authorization means an authorization issued by the DGFT under chapter 4 of the FTP 15 to 20 for import or domestic procurement of inputs for physical exports. So an advance authorization is a document which is issued by the DGFT under the provisions of the foreign trade policy. It can be either for import of goods or against an invalidation letter. The procurement can even be from the domestic market in respect of inputs. So using an advance authorization, it very clearly goes on to say you cannot procure capital goods. Necessarily needs to be inputs which are used for physical exports. So these are some of the finer wordings with respect to explanation 1 of notification number 48 by 2017, which defines what an advance authorization really means. So there is one portion which has been striked out and very clearly noted to say that this has been removed by notification number 1 by 2019. And what is that all about? That talks about a pre-import condition which was existing in the GST law, which went on to say one-to-one matching needs to be necessarily there, that you had to import the goods much earlier before availing the concept of, before availing the benefit of deemed exports or any of the benefits under this provisions of the GST law. But this was becoming practically challenging because I will have an advance authorization which is open. I will continuously keep on exporting on the one side, advance authorization against which I will be keep on importing, and one-to-one matching was always required. One-to-one matching to say whether I purchase the inputs in relation to such export before the date of export or whether I use some other domestically procured inputs which was not even against an advance authorization. So this pre-import condition was initially part of the GST law, practically became a challenge. There were notices issued in multiple fronts with respect to this pre-import condition, which was specifically provided under notification number 48 by 2017, and then it was later on removed in January 2019. So therefore, now the pre-import condition with respect to advance authorization does not exist. So advance authorization was a scheme under Chapter 4 of the Foreign Trade Policy. EPCG is also an authorization issued by the DGFT under Chapter 5 of the FTP 15 to 20 for import of capital goods for physical exports. Of course, the situation of our criteria of physical exports. So there could be a question that exports only require taking goods out of India. Whether deemed exports also require taking goods out of India, not necessarily. But ultimately, it should be for physical exports. And that is what is very specifically provided for an explanation 2 of notification number 48 by 2017, which defines the list of deemed exports. The third one is with respect to OU and EOU in a nomenclature, in general understanding, even though we think of only one type of unit, it could be an export-oriented unit or an EHTP, which is nothing but an electronic hard technology park, or an STP, which is a software technology park, or a BTP, which is nothing but a biotechnology park. So any of these transactions, which is also under the provisions of the FTP, is eligible for this concept of deemed export. But ultimately, what you need to very clearly know is these are the three definitions. But what is the transaction that would be covered as deemed export? The supply per se is the supply of goods by a registered person against an advance authorization. So I am a supplier of goods, I receive an advance authorization and I supply the goods against an advance authorization. Not a person who holds an advance authorization, not a person who is an EOU. Person who's an EOU is a different concept, but this is a supply to an EOU, right? Or supply of goods against an advance authorization. So I have an advance authorization, therefore I am supplying will not be covered under this concept of deemed export. So is my voice continuously clear? Is there any difficulty with respect to the audio? I would also talk a little bit slower if it is required. What about merchant export, sir? Can it be linked to deemed export? Yes, we have an interesting question. Merchant export is a different concept. Merchant export is a different concept under the provisions of the GST law, which is provided under a separate notification. So I will discuss about the concept of merchant export also after the presentation is now over. Is it mandatory informed to department as earlier GST regime? Yes, Elmalai sir, that's a very important and interesting question that we really have to say, right? That procedure is what I really wanted to explain over here. Whether deemed export is eligible for refund. So what is the definition of refund? Generally, definition contained in section 2 of the CGST Act, or as we saw, export of goods, export of services, contained under the provisions of the IGST Act. But the definition of refund is contained in explanation 1 to section 54. Section 54 of the CGST Act. Section 54 of the CGST Act provides for refund of tax, and there we have a specific definition of refund under explanation 1, which goes on to say refund includes refund of tax paid on zero-rated supplies. It is an inclusive definition. Whenever it starts with the wordings includes, it very clearly goes on to say it is a very wide definition, very wide interpretation of the definition of the term refund. So whatever is said as part of this definition under refunds is only illustrative, but it has a very wide meaning. So refund includes refund of the tax paid on zero-rated supplies of goods or services, or both, or on inputs or input services used in making such zero-rated supplies, or refund of tax on the supply of goods regarded as deemed exports. So if the transaction is regarded as deemed export, then also you are eligible for refund, and that is very specifically provided for in explanation 1 to section 54. With respect to this, Rule 89 of the CGST rules, Rule 89. So as we all are very, very well aware, that Rule 89 of the CGST rules talks about refund concept under the GST. Right? Section 54 Rule 89 has been amended by notification 2024, particularly with respect to deemed exports. Particularly with respect to deemed exports. So that is something which is to be highlighted and part of this discussion now, that we had a very specific provision in Rule 89, Rule 89 sub rule 4A and 4B. This was a very specific provision for the claim of refund with respect to deemed exports or with respect to a merchant exporter. With effect from 8/10/2024, with effect from 8/10/2024, wide notification number 20 of 2024, the sub rules 4A and 4B have been completely removed. The sub rules 4A and 4B have been completely removed. So, am I eligible for it? Is there any change eligible for the rate? This will now fall under sub rule 4 of the CGST Act, of the CGST rules. So this omission of 4A and 4B is a very important amendment that has happened with particularly with respect to deemed exports, because all transactions of deemed exports were very much eligible for this refund, and refund were made under this provision of 4A or 4B as the case may be, as a supplier or as a recipient of deemed exports. So coming to 89 sub rule 4, which provides for the refund, that is a very plain, simple vanilla formula, wherein it is equal to a zero rated supply of goods, which is nothing but export of goods. So a zero rated supply of goods or services, that is a refund under the refund of exports, is eligible under 89 sub rule 4, and that same provision is now becoming eligible for deemed exports also. What is the difference? Earlier, a transaction with respect to deemed exports was, if it is a deemed export, the purchase, the tax which was paid on the purchase, 100% was eligible as refund. But when it comes under the purview of 89 sub rule 4, only the proportion, only the total proportion would be eligible for refund. Only the total, only the basis on the proportion you will be eligible for refund. So even though this situation really happens now, still awaiting this change happened in October 2024, and we in the mid of November now, we are awaiting circulars. With respect to the very particular change with respect to deemed exports. So in the meantime, answering the very specific question, which was already raised also, to say, is it mandatory to inform the department as earlier, right? Before, in the pre-GST regime with respect to a very similar transaction of deemed exports, we had to particularly give some intimations to the department. And how is the scenario today? If you really see the procedure with respect to an EOU, touching about the concept of deemed export refund from the perspective of an EOU, way back in 2017, we have a very specific circular number 14 of 2017, which provides for the procedure regarding the procurement from a DTA by a EOU unit. And we have already seen what is the definition of an EOU as is defined under the explanation to notification number 48 by 2017. So therefore, whenever I use the term EOU, it covers EOU, EHTP, STP or BTP for that case may be. And therefore, this circular very clearly provides, first, there has to be a pre-supply intimation in Form A. The format of Form A is already also part of the circular itself. The recipient unit must provide a prior intimation in Form A, including the goods to be procured, the supplier details. Whatever goods that they want, can they procure? No, it is subjected to the approval of the development commissioner. And such intimation has to be sent to the supplier, the jurisdictional officer of the supplier, and the recipient's jurisdictional officer. So it is very important that this pre-intimation is a condition with respect to deemed exports. Sir, I have been doing deemed exports so far. I have not been doing this procedure at all. Practically, so far, department has been concentrating on issues like 2A versus 3B, GST or 1 versus 3B. They have not been questioning these areas. But is it a part of the law? Yes, it is part of the law. Is a circular valid? Yes, of course, a circular is valid. You can challenge the constitutional validity of the circular. But as of the moment, is it a procedure required to give a pre-supply intimation to the department of the supplier, and also the department of the recipient? So with respect to both, there has to be a pre-supply intimation in a form which is directly prescribed for. Then what should the supplier do? The supplier must raise a tax invoice and supply the goods to the recipient unit. Sir, if I am going to supply the goods with tax, why at all is this concept of a deemed export? With respect to an export, the transaction happens without GST, but when it comes to a deemed export, the transaction happens always with GST. So therefore, there is no specific exclusion with respect to raising of a tax invoice or the payment of tax by the supplier with respect to a deemed export. So the transaction by the supplier necessarily needs to be covered under a tax invoice, and he need to supply the goods. On the supply of goods against a tax invoice, the recipient must endorse the tax invoice, and immediately thereon, the recipient has to send the copy of the invoice, one, the endorsed copy to the supplier, the endorsed copy to the GST department of the supplier, one copy to the GST department of the recipient. This endorsed invoice, which is signed by the recipient, serves as the proof of deemed export. Sir, members, participants may please answer here. What is the proof of export if it is a normal export? Here, with respect to deemed export, it has been very clearly shown on the slide that the endorsed invoice serves as the proof of deemed export. With respect to a normal export of goods as is contained under 2 clause 5 of the AGST Act, what would suffice as an export of goods? Right? So you are very right. It is a shipping bill. The shipping bill would be the proof of export, and the shipping bill duly supported by the EGM. The Export General Manifest serves as the proof of export. Here, rightly said, sir, Surya Narayanan sir and Prakash sir as well. So here, the shipping bill supported with the EGM will not be here, and therefore, the endorsed invoice by the recipient will serve as the proof of deemed export. There is also a very important criteria with respect to keeping the records of deemed exports. The recipient of deemed exports must maintain the digital records of deemed export supplies, ensuring they're accurate, they're real time. There is an audit trail in the software. An audit trail with respect to a software under the Companies Act is a separate requirement under law. With respect to deemed exports, there is a very specific requirement whether or not you are a company who are bound by the provisions of the Companies Act. It is very important that you maintain the details of deemed exports with audit trail. The compliance with the mandatory data elements in Form B, that is also provided for in the circular. A monthly digital copy must be submitted to the recipient's jurisdictional GST officer by the 10th of each month via CD or pen drive.
whether at all this has been done is could be a very important question, but this is a very important mandate which is stipulated under law. So another question that comes is, so there is a supply made to an EOU, or there is a supply made against advance authorization, or a supply made against CPCG. Can this transaction be a blocked credit under the provisions of section 17? Or can I claim input tax credit for the entire transaction? We had a circular in 2022, circular number 172, which very clearly goes to say the ITC availed by a recipient to claim a refund of tax paid on deemed export supplies is not at all considered as an input tax credit. Therefore, it is not subject to the provisions of section 17. Generally, we would have the understanding that this is a normal input tax credit, but whereas that circular very clearly went on to say that it is not at all input tax credit. But now we have under the provisions of Rule 89 sub Rule 4 that this amount of ITC should also be included in the concept of net ITC as contained in formula. Claim the refund with respect to exports and deemed exports also under the same concept. Should the ITC be availed? Should the ITC availed be included as a net ITC in 89.4 or 18.95? This concept of the circular is no more relevant after the latest amendment to 10 of 2024, and therefore, if you are a company who are engaged in both supply of exports and deemed exports, or inverted supplies and deemed exports, or a combination to say you are involved in both supplies of exports, deemed exports, and inverted supply, hitherto so far, sorry, with respect to the period so far, you would not have been including this amount in the value of net ITC, but in the period going forward, it is very important that the value of net ITC, which is shown or which is to be computed under 89 sub rule 4 or 89 sub rule 5, also includes the net ITC with respect to deemed exports. So these are some of the very important concepts. So this is with respect to the latest change brought about in October 2024. Sub rule 4A and sub rule 4B of rule 89 have been completely removed. Therefore, if you are filing a refund for deemed export, go by the same method as if you are claiming a refund for exports. If you are going for a refund and inverted tax structure, yes, you need to follow the same method as inverted tax structure. And this value of ITC relating to deemed exports was so far not included at all in the refund formula, but going forward, that also needs to be included in the value of net ITC. The concept of adjusted total turnover will very clearly include the value of deemed exports also. So this is one of the important concept, because if you really see the notification, it very simply says 4A and 4B have been omitted. So there is no inclusion. There is the removal of words, selected words from Rule 89.4 also. But if you really see, there has not been any introduction of a new provision, but still this change has a very substantial impact on all those people who are involved in deemed exports, and therefore it was felt that this important concept be communicated, and therefore we have had this 48th session of Zen Tax Talks. It was extremely a pleasure for us to have you all at this 48th session, and we look forward to have you all in the upcoming sessions also. Thank you for your active participation. So if there are any questions, works contract is a service. So deemed export is not applicable for this, right, sir? Yes, so deemed export is only and only with respect to goods, and that was what we really wanted to bring out also during the presentation. Yes, Rajshekhar, sir. ITC to be reversed or not? No, sir. It is not an exempted supply which will require a reversal of input tax credit with respect to section 17 subsection 2 or 17 subsection 3. This is a deemed export for which you can claim a refund under the provisions of 89 sub rule 4. So Suryanarayan sir, thank you for your kind words. Thank you for your kind words. So we look forward to all your active participation in the coming weeks. Thank you, everyone.